Hello, 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 everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with the one and only world-famous Bob Iacchino, is actually on the live stream today. I'll be inviting him on when I feel it's an appropriate time.
What was it? The turnaround in the Nasdaq? Is that why I got the
Hold on,
invite?
hold. See, Bob's already talking in the background, but I haven't even put him
Already
on yet.
talking.
Hold on. Give me all right. You know what? Since it's all gone kaput now, if you're new here, please subscribe, ring the bell, and if you want to see Bob. If you don't want to see Bob, then just ignore that. I'm gonna disappear me for a second. I gotta disappear me.
What happened to us being on at the same time?
I have to set it up each time because
Oh,
I'm clicking. I'm my everything's gone haywire. Let me do that. Let me add me on the left. Oh, there we go.
there
You
we go.
on the
Look at that.
right.
That ain't
Oh
bad.
boy. There. Oh. Hold on. See there. Oh, don't want that. Hmm. There we go. Why is this? There we go. There we
There we
go.
go. That's what you're looking for.
There we go. See how I feel like you with the technology.
You feel like me with the technology.
Yeah, I couldn't get it right the first time.
I still use an attached mouse.
What? They make
I still
those?
use a mouse with a cord.
They the tail, you mean?
The tail, whatever. I
The
don't know.
mouse. I have a tailless mouse. Let's see who's here. Hello, Wavy. Face. You mean Meta? Meta's a big disappointment. Come on, it's all even up here in
Meta.
the. It's right here. Look, it's Meta. It's not Facebook. You got to get with the program. Nasdaq back below 15K. Yay, sailings here. Mike, hello, Mike and Bob. Christoph, hello. Kalani, aloha.
Call
Wow.
yourself Meta when your symbol is still FB.
I know they were supposed to change it, but I'll still refer to it as Facebook. I'm just
Yeah,
giving
me too.
Wavy.
Same thing with Google. Still calling themselves Alphabet, and it's Goog.
It's Google.
Yeah,
Wavy,
it's
it's
Google.
crystal clear. Fantastic. Thank you, Facebook. Say short sellers. How are you guys doing? Qualcomm down 2. Stream looks sharp. Hey, was Stream look sharp? It must be because Bob, sharp dressed man, is on here.
I got on a T-shirt.
Well, you're better than me. I got my same sweat jacket on.
Well, you probably should
Uh,
wash that thing.
I do wash it.
All right, all
I
right.
actually do wash it. You
Once a
know.
week.
So we'll peek in on Meta. We'll peek in on Qualcomm. We got those are the big ones after hours. Let me just get through a couple of the cleaning aspects, the house cleaning aspect tomorrow morning. Let's see. Let's see. Is there anything that I really want to look at? Uh, Not I mean, I'll look in at ConocoPhillips and some other stuff, but nothing that's really earth shattering. It's for tomorrow morning. I mean, I'll check Nokia. Let's also see what stuff came out today. Oh, ADP non-farm payroll employment change. That was a big miss. That was a
Yeah,
big
that
miss,
was.
and what crude was a draw.
PayPal had a big miss.
What was that?
PayPal had a big miss as well.
PayPal had a big miss. Let me get you back on. Yeah, PayPal got obliterated. Let's get that heat map up there real quick and see. Microsoft again up again. Apple up. Google still up 7.5%. We need to check in on that because it was selling earlier. PayPal just got obliterated today.
Yeah, Google
Obliterated.
Google was up 10.3% on the highs, I believe.
Yeah, the Google at the after their earnings after hours yesterday just jumped big time, and then I wanted to see if it held up or sold off. We'll just check in on our since Bob's here too, the CME Fed Watch tool because it was dropping from the 50 basis point hike based on what the talk yesterday, and now that's down to 5.6. So we're still at essentially 95% on the big hike. By the way, just want to put this up from earlier. Let's see. Now I've lost my. There it is. when we talk about Nasdaq, and this is my long term views, is we're still going long, lower, longer term. But here's the PE ratio on the Nasdaq, and even with this little downdraft blip, we're at 25.7 still, and I'm expecting at least before this is all over to get sub 17 on the overall Nasdaq PE ratio.
That's aggressive.
Well, I think we're going to get there, and
Yeah.
that's at some point. We had a nice little reversal in the Nasdaq. There you go. So, what are your thoughts on today, Bob?
Well, I think today showed the overall weakness of the market because if you look at what dropped the market as dramatically as it did, I don't even want to say after hours. The cash NASDAQ finished positive versus yesterday's settlement, but negative versus the open. The NASDAQ started off the day leading the big three, I guess leading all four because the Russell was basically negative all day long. We didn't have that much of a yield move, so it could have been a little bit yield driven. And then you look at what happened with the futures just based off of, I shouldn't say just based off of Meta, but Meta is what drove the futures much, much lower, even though Google killed it, Apple killed it. Qualcomm weak as well, as somebody in the chat mentioned. I didn't see who that was. PayPal got crushed, but that's not, I wouldn't even call that necessarily a NASDAQ stock at this point. It's almost a finance stock. But so overall, I think the selling is done for now, but the selling is not done. And it could have started with this move today with the NASDAQ. I do still see the parallel to those couple of moves higher that we saw in the chart that we looked at, I think 2 or 3 times ago that I was on a live stream, where you compare it to 2000, 2001 and the way that the market behaved before it fell over 40% from the highs. I'm not saying we're going to get that now, but I think that buy the dip mentality is much, much weaker than it's been in the past. I also think when you look at, and Mike, this is from that article you sent me, when you look at the shape of the tails on the curve with the Fed, while most people believe it's going to be 25, and I do as well in the March meeting, I think it's going to be 25 basis points. It is possible to get a 50 snuck in there. The CPI estimates for next week are as high as with JP Morgan, I believe, and I believe the other one is Deutsche Bank. It might be another foreign bank. I don't know who it is, but estimates for CPI are 7.3% on the high end. And then you look at what happened in Europe. Christine Lagarde said that the EU doesn't have the problems the US has in terms of supply chain and labor shortages. And their year over year headline inflation is at an all-time record in terms of change from last year. So it's up 5.3%. That's the highest on record. I'm sorry, 5.1, which is interesting because last month was up 5%. So I guess that was the previous highest on record, or at least tied for it, because 5.1% is the newest all-time record. And that's Christine Lagarde saying they don't have the U.S.'s problems. So does that mean, I'm stretching it here, so bear with me, Mikey. Does that mean that if the EU doesn't have the U.S.'s problem and they have 5.1% inflation year over year, does that mean if the economy solves the supply chain and labor shortages, do we exist at about 4.5% to 5.5% inflation? Is it just that sort of 1.5% to 2% extra that those specific problems drive into our markets? I don't think I know the Fed can't control energy prices. We had OPEC announce today that they're going to increase production again by 400,000 barrels a day starting in March, yet crude didn't move. As a matter of fact, it made a new recent high. We're now at almost 8-year highs in terms of where the high today was versus late 2013, early 2014. It's almost 8-year highs now versus the high today. I still think I made a prediction on Yahoo Finance at the end, sort of the end of December last year, that crude would hit 95. I was on Yahoo Finance again today, and I said I'm sticking with that 95 prediction on crude. Fed can do nothing about this. Hiking rates doesn't stop driving. It might stop a little bit of flying, but not much because most people don't finance their flights. So it can take a little bit of discretionary spending away because the increased price of crude oil, but not really much the Fed is doing. So you can look at X Food and Energy if you want. but the average everyday person is very under the thumb of oil prices and gasoline prices. So that's my all-in estimate. I still think the Fed's behind the curve. I think they should have raised rates in June of last year, and they're behind the curve. They're now raising rates and inflation that might be entrenched with the economy starting to mildly slow down. That is ugly for stocks, and I still think that while I believe the selling is over for now, it's not over.
And I was talking on the live stream yesterday. I actually still see, I talked to a lot of people, and everybody's still in buy the dip mentality. Everybody that I've talked to. And
Watch crude Mike, because crude has a 13-1 bullish bias, right? So there's probably going to be a dip, right?
Well, I'm talking the broad market. Crude, I mean, we're into, even on the monthly. I have the monthly chart up here. Look at this. We're into a clear path move.
Yeah.
Easily. This, even on pullbacks, this is the energy sector I'm just aggressively bullish on across the board. And then you have like things like Exxon just crushing earnings.
If you're somebody that manages risk the way Mike does, or the way that I do, or the way that we both do in our stock product, in our joint stock product, you can take 4, 5, 6 losses with managed risks. Some of them may be a little outsized. But people just buy the dip blindly. They just buy, they think, oh, this is a pretty good dip, I'm going to buy it. That's where people get crushed. That's where people get smoked. By the way, you notice the break in the correlation between Bitcoin and equities today? I think that might be a regulatory thing, but.
Yep. Well, Bitcoin when the NASDAQ rolled, I mean, Bitcoin now could not get above, finally at the top of the rotation zone and now rotating back down. That means I have to do another crypto update because now I'm watching for the return to, the 30K area with this rollover. But yeah, it's got a pretty decent correlation with the NASDAQ at this point, and it sort of trades like it. So that's where that stands. What did Google today? See, again, we were up big, and then I wanted to see how much. I didn't look at it going into the close, but we got a pretty decent start to the gap fill against prior after a gap up. So it had pretty much selling all day until the very end. So I'm still watching to see how that behaves longer term. What else? You mentioned PayPal.
Yeah.
PayPal, which was finally, we had this massive double top on this weekly. And finally, now it's gone through all the targets. And even that 200 week, look how far away from it is from the 200 week. Now, I'll watch for some point a bottoming pattern and a bounce, but this is ugly.
I want to see how many people that are buying the dip now will sustain as we roll down a couple more times, right? Which I think, if I'm right about that, I think, Mike, you're looking as well to potentially see another roll down, although you may not have a signal for it yet. How many people who buy the dip are going to be able to stomach some misses, first of all. You can see the effect on the NASDAQ of a miss versus the effect on the NASDAQ of a beat, right?
Mm-hmm.
We basically had a beat in Apple. We had a beat in Google. We rose for 2 days, somewhere in the range of a 50% retracement of the entire down move in the NASDAQ happened over the last 3 days. And then Meta comes out, Facebook comes out, and boom, we retrace all of yesterday. For the most
part. Let's take a look at Meta. That hurts.
Ouch.
Ouchie. Oh wow. That's against critical. That even broke that significant level around 260. That's down at critical support.
That's a really ugly part.
This is the area that I'm expecting now. Even if this does bounce, I'm expecting this to hit the test of 200 week.
And this is why I think people need to watch you, because if you're going to buy a dip, at least buy a good one.
Yeah.
Don't buy it. People will consider a down market to be a dip. I think there's a difference.
Well, there's, I
Dip to
mean,
buy versus a down market.
there's good solid reversal patterns. The problem is with a lot of these things, and I showed the breadth even yesterday with, now let's see where it is. We, even with this little rally we've had not a lot of broad market support. This is what I was showing yesterday with percentage of the stocks above the 200 week. I mean, the 200 day moving average. We're only at 35%. So you can see this little chart here. All right. So you don't have a ton of bullish. It's recovered a bit, but we don't have a ton of bullish participation yet. Even here, and then you have the 50-day average, and we're up to about 32% of stocks above their 50-day average. That's still the breadth is horrible, and now the 20-day average it's recovered. It got back to 40%, and now turning down with today's price action. So it's going to be interesting to see how we sustain with this move. What else were we looking at in terms of stocks, though? What else? Qualcomm.
Yeah.
Qualcomm's just slightly off. I mean, we had this double trigger and it hit the first and second targets today, but that's only off slightly. Anything else? What else do we have? I'm looking at the chat real quick. Spotify. Rich says Spotify is crushed. Let's see. Spot. It's back down to a significant level, but that's a pretty substantial drop. I mean, it's still holding its lows, so it'll be interesting to see if there's follow through tomorrow, but it's still holding the most recent lows of 172.98, so that'll be interesting tomorrow. But it right up to the rotation zone, and this prior support becoming resistance, and now what were earnings? So they had a minor upside surprise, but still losing money.
Their subscriber base missed. Their subscriber growth had missed by about, I'm going off the top of my head, but I think it was expected to be about 4.25 and it was about 4.13. Okay. That's off the top of my head, but it was somewhere in that type of a miss. It was still over 4 million, but less than the market expected.
Let's see what else. All right, Rich. He's our earning guy. He's all over this. We have Pinterest. There we go. Pins. I always forget that one. Okay, so that's at new lows. Again, all these things into the rotation zone and rotating back down. So that broke the most recent lows. So that's, I mean, overall, not very strong. What else? We had a Snapchat. That's an easy one to remember. Oh, new lows. Wow. This is why, again, it's trying to go against these daily rotation zones. Just, they're not good. They're not good. I mean, we had this little double. It probably hit the first target there. Yep, first target, and then rolled over, and now at new lows. And what else? I wouldn't touch anything. And people are still, these dip buyers are going to get, Etsy, new lows, rotation zone, and new lows. Pretty similar patterns with a lot of these.
It's funny because I was looking at the way that people look at this buy the dip mentality. And again, like Spotify had good earnings, but they missed on their subscriber base. So everything got down. People who just blindly buy the dip were entering that area of, I'm buying because I hope it goes back up because I'm trying to make money back. There's a stock, little story. There's a company called Novavax. It's NVAX. And before I moved to Florida, I was in Chicago. Anybody watch Chicago Fire? I'm not going to mention who, but in case you watch Chicago Fire, there's a few of the actors and actresses on Chicago Fire that would come to a restaurant that I frequented. And we had just bought Pfizer very recently after this particular, prior to meeting these people. And they used to come in all the time, and I became somewhat friendly with them. And they said to me, "What do you think of stocks?" And I said, "Well, we just bought Pfizer, right? Full disclosure, we just bought it, but we liked it. I think we bought it at like 36 and we sold it at like 44. It was a trade, right?" And these guys are like, but we all already bought this Novavax stock. And I remember looking and I marked it on my chart, and they all bought it around 59. And on a recent trip back to Chicago over Christmas, I saw that it spiked up because they had bought it sometime in June or July of last year, and it had spiked up and it had started to come back down. And they just kept saying, "We think it's going to go back. We think it's going to go back." And I said, "Why?" Well, they got a coronavirus vaccine. I'm like, "Well, so does a lot of other companies now." And well, we think it's going to go back. We think it's going to go back. A couple of days ago, it fell just short of their buy level. And I texted one of the guys I know, and he goes, "Yeah, we think it's going to come back." It's literally back to their buy level. They had quintupled their money, and it's literally back to their buy levels. And now they're just sitting there. And I kind of sit there and think, when you look at the sector performance today, that's a long, short story long. When you look at the sector performance today, communication services was the strongest sector, up over 3%. Then it was real estate, utilities, consumer staples. It was all the defensive sectors after that, right? And when you broke down, looked at the subsectors, it was the internet stocks that were driving. They were up over 5%. I think they call it internet media or something. I forget what they break it down as. And that literally seemed like a hope trade to me when I looked at it, because the rest of the communication sector wasn't that strong. It was media, it's mobile phones. And he looked at it and I said, "This just looks like a hope trade, because communication services is up 3% and everything else is defensive." Literally, the rest of the sector leaders were defensive. And if you start getting your Qualcomms and your Metas and your Amazon, I think it's Mike is saying, Rich is saying Amazon is down 2 now. If you start getting these, they're going to drag that hope trade down, because people are going to sell the winners like Google, and they're going to sell the winners like Apple, and they're going to try and hang on to their losers like these guys who own Novavax now did. Just ugly, ugly performance in that hope trade.
Yeah, and here's Twitter. I mean, Twitter doesn't have earnings until the 10th, but it's selling off in conjunction. It's down $3 after hours, and they didn't even release. What's Amazon? Oh yeah,
Yeah,
Amazon
it popped
back.
up and dropped pretty quickly.
That's pretty big.
Mm-hmm.
And they have earnings again tomorrow. So, and they're selling off just in. We are getting a lot of sympathy sell-offs. So
If I'm seeing this right, Google's down 1.75% in aftermarket as well now.
yeah, I have the the gap harmonics up here, and it's approaching the 50% level. My key thing is while I'm watching this 2850 area, 20 we get a close below that, and I'll then start watching for the gap fill. But this is not pretty in the broad market still. What's
And it's
just
really whatever's affecting it. CEO of Qualcomm said, "I wish I had more chips to sell." That's not adding money to his bottom line, regardless of whether the demand is there or not. It's not adding money to the bottom line.
so Microsoft holding up after hours. So you still have an Apple holding up pretty much after hours. So you still these a couple of these bigger, but the list is shrinking of these stocks holding this thing up. Wavy just posted Facebook. We're hearing from advertisers that macroeconomic challenges like cost inflation and supply chain disruptions are impacting advertiser budgets. So I don't think a lot of this stuff is going away. Ooh, that's a big reversal in AMD too.
Ugh.
Well, coming back up again, this was the
It's not
earnings
good.
stuff, and then we had earnings on the first. Today's the second, and it just got pretty much sold all day. So these things are still gapping up with these when it's lighter markets after hours with stronger earnings, and then it gets into the regular markets, and they just get sold.
Yeah, I'm seeing the E-mini NASDAQ now down almost 90 basis points, 0.9%.
Yeah, so this is just overall. I'm gonna keep watching. Well, I didn't check it. Okay, so notes can't get above the rotation zone yet on the daily. Yields, well, that's the yield curve. What is getting close? The 10 fives are interesting. Only 17. Oh, the 10 fives are only 17 basis points.
What are you looking at?
The tens versus the fives yield curve is just 17 basis points.
That sounds right.
I was just looking at that here. So yield on the 10 years sitting at a buck 80, and that's just sort of holding. So, I mean, we don't have much going on with the treasuries at this point, though. It's just all we're still getting the high flyers. I'll call it the high flyers are just getting taken to the woodshed again.
Still got the 20-year versus the 30-year inverted. Um, Early this week, you had the 7-year versus the 10-year go inverted. Never settled inverted, but it did go inverted intraday. And I think you and I mean, I could be wrong. You can correct me if I'm wrong about you, but I fully believe we're going to have an inverted yield curve, and it's really going to freak stocks out.
Oh yeah. So which ones were you talking about? Which went inverted earlier?
710 inverted intraday, 7-year, 10-year. Mm-hmm. The 20s,
Yeah,
30s has been inverted for months now.
yeah.
20s
The
versus 30s.
710 went inverted back. That was a couple weeks ago, and now it's. But
Yeah.
that's gonna. It looks like that's just gonna continue to drift down and invert
Mm-hmm.
again in the next bit.
And then
So,
look at the 20 versus 30 if you can.
uh,
That's
I,
been inverted for months.
hold on. What the? What? I didn't want that. Just give me my US 30Y minus US 20Y. Enter. All right. Let's see. There we go. Here's your daily chart. Let me get to a nice line chart and hide the indicators. Yeah, it's you can see how that's been inverted. Wow.
For a long
Since
time.
yeah, since the end of October.
Yep.
So that's the biggest one. The next closest one on the ones I'm tracking is the 10-5. It's close to 17 basis points.
Mm.
So we're going to be in interesting times, I think, for a while. Let's see what else. What do you make of the Euro USD? Well, let's take a look. Do you have any thoughts on the Euro USD, Bob?
I do.
Well, that's why it's a good thing you're here.
Well, I think again that while the 4 to 5 Fed speakers that we've had since the meeting kind of dialed down the expectations of a 50 basis point rate hike in March, which you showed earlier on the CME Fed Watch tool, that percentage has been dipping. The pressure that the ECB is going to be under with this record inflation has people perhaps prematurely getting long the euro. I think that's what it is because, again, it was around 8 days ago, 10 days ago. I'm talking about calendar days, not work days, that Christine Lagarde, while on a Zoom meeting, maybe it was a conference meeting, I don't know if it was a Zoom meeting, while she was on a teleconference talking about the World Economic Forum and some breakout discussions they were going to have, she talked about the EU not having the problems that the US has. And if that's the case, then you have organic 5% inflation, 5.1. I mean, organic, not, you know, freaking, it's not caused by things that are going to reverse. So that's a pretty bullish scenario for the euro to me. Okay, because you're looking at a situation where um, the euro needs to get stronger. Because if the ECB was not going to be moving rates, well, now they may have to. And if you look in the last four sessions from the low of the 28th, we've had almost a 1.5, a little bit more than 1.5% move on the euro. And it's super interesting, Mikey. If you draw a channel, I'm looking to see if you have it up now because I pulled up my own chart here. If you draw a channel from about November 19th, 20th, somewhere in that range, draw sort of a horizontal up channel in that little sort of upward consolidation that we had, and you measure the distance between the high and low of that channel, and it was about 1.66% approximately. Okay. The move down that ended with the low of January 28th was about 1.71%. So we actually, once we broke the channel on January 20th, we moved almost the exact distance of the width of that channel to the lows. We've since recovered almost the exact same width of that channel again, proving again that measured moves work, right? When you're looking at things from a technical perspective. So I think this bounce, this about 1.6 or 1.7% bounce that we've had, is likely taking away the idea that the ECB can ignore inflation for now while they await the ECB meeting. That's really what this move is to me. And that meeting's tomorrow, so we don't have to wait that long.
Yeah, we have the BOE interest rate decision. Waka Waka thinks they're going to go 50 basis points. So
Yeah,
we
I don't think the BOE is going to go 50. I think they're going to continue to go 25 like they did last time. If they go 50, it would surprise me. I think the entire market really wants to. There's that move. Look at that. I think the entire market really wants these guys to go slow and steady, and I think they'll start off with that. And then they'll see that inflation is entrenched, right? Because inflation won't dip. It's not going to dip. Not the way they hope it will anyway. I mean, I'm not a Fed guy. I'm not somebody who tries to tell the public what the Fed should do, right? That's not my job. My job is to anticipate what's going to happen based on what the Fed does or what the markets are expecting the Fed will do. But if I were in the room, I'd be saying we need to go 50, and we need to go 50 right away. I'd be talking to the BOE, I'd be talking to the ECB, and I'd be talking to the US Fed. Say, you need to go 50. You need to shock the markets because this stuff is entrenched. But I think they'll do 25, and they did 25 last time, and they'll stay on that path, at least for now.
Well, wasn't it Bullard talking yesterday that that they're going to wait till really see the effects and stuff in July and August? And if this is entrenched, I mean, you're going to give it like 5 more months?
Right. And again, they're the ones out there saying it's supply chain and it's other things other than natural organic inflation. Obviously, policy's been accommodated for too long. It's labor shortages and supply chains, and those will reverse. Well, is it? Did you see the wage cost index data? I mean, it's high, dude. And you're looking at the part of the economy that has been holding inflation down has been wages. And that is now going away. I know somebody who's turning a job down because they say it's not going to keep them afloat with where inflation is. I know somebody who recently quit a job who then emailed their company calling them all basically a lot of bad language words that Mike wouldn't want me to say on here and saying, I've got 10 job offers already. I mean, the labor supply issues are causing rises are causing boosts in the wage component of the price equation. And that's not going away. Anyway.
Wavy, he says, Bob, it's phenomenal how you can relate the technical side to the macro so easily. What suggestions you have for someone who is more focused on technical, wanting to learn more of the macro?
Here's what you do. You do exactly what I did. The things that are your most reliable technical indicators, see what they're saying, and then go read both sides and see which side agrees with the technical picture. That's your macro view. That's what I do. I read a lot because I think the macro is interesting. And then I look at the charts and go, okay, which one of these makes sense based on what's going on technically? Well, this one makes more sense. And then you actually kind of learn it, right? You kind of learn the macro side. The riskiest part of what you just asked me is that you'll start trading the macro without a technical basis behind it. If you start doing that, you're going to find you're going to be wrong way more than right. And one of the great things about technical analysis is you're never wrong or right. You just go with the probabilities, and that's it.
You restate that one thing because that's what I see people shift into. They start to get into.
Don't trade your macro opinion. Look at your charts. Take your best technical tools, the ones that you rely on, that you've seen through your experience are the most reliable, the most high probability. What is that saying? Okay, so right here, let's just use this euro. Okay, the measured move for me for channel trading is complete. If we break back into that channel, what does that tell you? Well, that tells me that the ECB is probably a little bit behind the curve and the market is going to start to trade as if the ECB is going to have to catch up, which means rate hikes coming and more quickly than the ECB is saying, and maybe even more aggressively than the ECB is saying. So when I go on TV, that's what I'll say. I'll say I think the ECB is behind the curve and they probably need to start looking at being a little bit more aggressive. And the euro will go up and I'll look like I knew from my macro point of view, but I didn't. I just read both sides and saw, well, the charts are telling me that we might go up to the top end of that channel now. What macro narrative fits with that? And that's the macro narrative that I believe, because the charts are telling me that's what's going to happen. So do not learn. Macro is fun. Macro is a hobby of mine, but I don't even trade my own macro opinion. Look, I like Checkpoint software, okay, as a stock. I told Mike that this morning. He said, we don't have a buy signal. Okay, I might as well go F myself then, because I'm not going to trade it. Doesn't matter if I like it. Doesn't matter. My macro opinion is that Checkpoint software, CrowdStrike, some of these internet security stocks are going to do really well in the coming quarters. Russian hacks, things like that could happen with some of the geopolitical tensions. But until we get a buy signal, Mike, remember Chipotle, how long I wanted to buy that? I think it fell another 40, 50% before he let me buy it.
I mean, this was back. This was back. Oh, yeah. This was wonderful. This was wonderful because we were looking at it. Where was it? I mean, this was.
It was the E. coli thing, whenever that was. It was the E. coli drop. I kept driving around the city of Chicago saying, the lines aren't that much smaller. We should buy it. He's like, nope, not yet. Like,
no, okay, and that's you were talking about this. This was in the 17.
Yep.
And I mean, it was close to 500, and it finally bottomed out. At around 250. That's a 50% haircut.
I think it was about 380, 400 that I wanted to buy it.
Yeah, and it was like no.
Like the lines are building again. People are buying Chipotle. It's like no, don't care, can't buy it yet. Then we ended up buying it in our stock service a while after that, and I believe it was a profit.
Yeah, I mean, it finally got some. Yeah, we had some capitulation moves, and then, but you look at finally got the base to build, and you got a nice breakout above this. You guys started to get the rotation zones in your favor, and then it gave multiple opportunities, and then look how much it went on a run. This was, of course, the COVID stuff, but. Before that, look at all the opportunities you had to get in on an uptrend versus trying to call a bottom here. And
that's a great example because it's like, so when we got into Chipotle, if I did an interview, and I don't know if I did or didn't, after we got into Chipotle, somebody would have said to me, what stocks do you like? Chipotle. Why? Well, they got good delivery and good online presence with the pandemic, but that's not why we bought it. That's just the narrative that fits with the run-up in the stock.
Yep. And I got to put this comment up there. So, because, Mike, you need to seize on the fact that Bob said you are never wrong.
I did not say that. Well, no, I did say that. Because Mike doesn't say, I personally believe this is going to happen. Mike says, the charts are saying this. Here's my next target. Here's the next support. Here's the next resistance. That's what he says. So this goes back to something. Who said that?
That was Sailing Dream.
Okay, Sailing Dream. What we've always said is the proper way to trade is do every high probability trade that you see and manage your risk, control your risk. And if you do that, you're not wrong, because a losing trade is not incorrect. It's the complementary probability to a winning trade. So I think, Mike, I don't know if you kept this up, but I think, yeah. So in our stock service, we have a 65% win percentage. Okay. And that's after a string of losers and some bad months, a bad month and a half or so. We were at 74% at one point. So think about what 74% winners in a service is, right? That means theoretically that we could do 100 trades and our first 25 of those could be losers. Theoretically, it's not the way that it breaks out, but if you have a 74, 75% winning selection, you could have 25 in a row losers and then go on a 74 stock run and your percentage still remains at that 74%, right? So you have to do every single trade that your particular method, or if you're augmenting your method with Mike's analysis on these technical live streams, you have to do every trade. I think I told the story already, but we actually had a guy that said he didn't buy Hormel when we told him to because he wasn't a chili guy. All right. Hormel was a winning trade. He bought Heinz when we told him to because he liked ketchup. Heinz was a losing trade. So anyway, technical trading is never wrong if you have a high probability method. A losing trade is not a wrong trade.
It's just a loser.
It's just a loser. It fits within the math. It fits within the probabilities.
And you can get.
So yeah, technically, Mike is never wrong.
Just say that one more time. Just
no, I'm done.
Rich, Euro GBP bearish head and shoulders. That doesn't fit in with our rules, but that is I'd still look at that as a big double bottom.
Yeah, remember, head and shoulders is a reversal pattern. If you don't have a pattern that it's reversing, then it's not a head and shoulders.
Yeah, this would not be a head and shoulders because it's a reversal pattern and you're already on the lows. The only pattern here is this double bottom, but this is still against the rotation zone, so this could still easily go to new lows. Just want to take a look at that.
There's something we should mention in this, Mike, because somebody might see that as a bearish head and shoulders. It technically is not a bearish head and shoulders.
No.
And then the market goes down and they think they were right in that analysis. It's not it's definitely not a head and shoulders in terms of a technically correct head and shoulders.
Correct.
But could still be a bearish pattern. I just think it's going to go up to that top of that channel before it continues lower.
What else do we have? Let's see. I'm just the main focus on Friday is on measures of wage cost pressures and labor market slack rather than NFP number, with Fed officials this week already noting they expect a weak headline number.
Totally agree, Rich. This is the first, I want to say maybe the first time in my career that CPI and PCE deflators are more important than non-farm payrolls. If you think about it from the Fed's perspective, and unfortunately I got a hard stop again, but if you think about it from the Fed's perspective, they now have a dual mandate. They didn't have a dual mandate when Mike and I were coming up. They had a sole mandate of price stability. Clearly, we do not have price stability right now. Not even frickin' close. Their dual mandate is maximum employment and price stability. That's just ridiculous. That's like saying I have an Italian restaurant that has two goals: making the best pad thai and the best fresh pasta. What? Nah, that's not even a good analogy. But 3.9% unemployment, the Fed can hide behind that and say we've reached full employment. You can argue about the participation rate and about the U6 and all that, and I would agree with you on a lot of your arguments. But they have under 4%, on a headline under 4% unemployment rate to lean on in terms of full employment. What they do not have is price stability by any measure. So CPI, PCE, all the inflation measures, Michigan sentiment, inflation expectations, University of Michigan inflation expectation, all more important than the headline non-farm payroll, along with wage cost index and the wage numbers in the non-farm payroll. And it's the first time in my career, I think, that I've seen that, coming up on 28 years now.
So if inflation's entrenched and stays high and the employment numbers get worse, I'm not just talking this Friday, I'm talking over the next few months, what do they do then?
It's bad. I honestly think they pull back from tightening. I think they're much more willing to withstand inflation. Janet Yellen and her husband, about 15 years ago, Janet Yellen, former Fed chair, now Treasury Secretary, and her husband wrote a paper about how employment was much more important than price stability years and years and years ago. You can look it up. I don't know when they did it. And she has said when she was Fed chair that she would allow a certain amount of inflation in order to get unemployment rates lower. She's driving the bus here as much, if not more, than the Fed is. So, because she's funding, well, the Fed is funding the borrowing that the U.S. is doing, the U.S. Treasury is doing. So they lend out and the Fed buys it, right? And that apparently is supposed to stop. This might be one of the reasons that you notice that the Fed has not tapered their balance sheet yet they're about to raise rates. So they're going to be buying issues with higher yields attached to them, which I guess is good for them. Doesn't help the U.S. debt situation, but from a perspective of if unemployment were to start to rise back toward 5.5%, I think they'd stop hiking. They might even go back to QE and the like. So,
Okay, well there you
anyway,
have.
I have two things. Is there? Yeah, we are great partners. People call us a husband and wife, and happy wife, happy life. So we just compliment each other.
Which you should keep me happier.
No, you pick on me enough. I have a question for you guys, if you could. Is there any specific questions for me before I leave, number one? And number two, I have a favor to ask you guys. If you could also go to the Pure Exposure channel and subscribe to that as well. Keep watching on here. We're good on views on that because we do some other stuff on there. And if we can get the subscriber count up on the Pure Exposure channel, it's like a sister channel. This live stream is on it right now, but we want to get those subscriber numbers up. So if you hit that subscribe button to that as well, that would help a lot. If there's any more specific questions for me, I'll wait a second, but then I got to go and leave Mike to the technical part.
Wavy, please no QE. Anything but more QE. Great analysis. Also, can you shed light on Google stock split?
I really can't. Google stocks historically tend to rise after a split. It'll help them get into the Dow, although I'm not sure why that helps them. A lot of the time, stock splits precede the desire of a company to get into certain indexes and into certain funds that if they buy too much Google, they have too much of an allocation to Google. So I don't know if they set a date on it, and I really can't shed light on why they did it. Apple's done it multiple times, hasn't seemed to hurt them. So I can't really shed too much light on it.
All right. Well, why don't we call it a day? I'll just I got like a couple minutes before the next one starts, but I'll just briefly go through some key levels. Thank you for being
All right,
on.
I'm going to hang up. Thanks again, guys. And Mike, I'll leave it to you. Mike, Wavy is asking if you could hit the channel somewhere, the Pure Exposure YouTube channel.
Send us the link. I will put it in the general section, Wavy, on Discord. Probably between live streams, if not after the company that should not be named. I'll put the link into Pure Exposure YouTube.
And Mike, Mongo says hello. I'll talk to you guys later.
Okay, great. Thank you. Bye.
Cheers,
I'm
guys.
staying on, guys. Hold on 1 second. Let me disappear. Well, now you get Big Mike. Do you want Big Mike or Little Mike? I guess we might be stuck. There, we're stuck with no Mike. There we go. Little Mike. Little Mike is back. So hope that was helpful. I will put that link in. Yeah, we're trying to. You want Big Mike? Uh, well, I'm trying to make this regular, like once a week at least with Bob, and it really helps if you can all go to Pure Exposure. I will put the link in Discord, but otherwise, if you just do a search, uh, Pure Exposure Media Group, and it's exposure with no E, a capital X. Okay, Pure Exposure, and I will put that in Discord. But the more subscribers we can get there too, we're trying to grow that other channel for different content than will be on this one. So all the help you can give us would be great. Tomorrow is red, obviously. I'm lean. We had the rally continue. I don't know if the Dow, the Dow is trucking along still. The Dow, and this is more the flight to the big names and safety. I wanted to look at something else before we do this. It'll be interesting tomorrow. See here, we were talking about value and growth, and I talked yesterday how we were going up in the growth component, and now look, we did not get the close above the rotation. We got a gap open above the rotation zone in this one and rotating back down. Gap open, rotating back down into the rotation zone, and the rotation zones aren't as accurate with ratios. But what I am watching is to put these, if you have a trading view, or you have anything that you can do, VUG divided by VTV or IVW divided by IVE, chart those and start watching them tomorrow morning after the open. And if it starts being red and the Dow is strong, it's again shifting from growth, which we already looked at a bunch of the high flyers that have still been beat up. We went through the PayPals. What did ARK do today? But a lot of this, it rotated temporarily into growth. And look at ARK. Kaboom. Rotation zone. Not even to the first target on this little double, so we'll have to just see about that. But rotation back down. So I am going to definitely be watching for the NASDAQ to be red unless something happens, especially if the Europe sells off. So I will be waking up for the European Open just to glance at it, because then I go back to sleep and it's sort of embedded in my mind. But if we sell Europe into the US Open and then we're weak in the US Open, I will really start watching for a continued drop in the NASDAQ. The next key areas, again, we came up to the second target on the double. No close. This is why we always watch the close. No close above the rotation zone and rotating back down. Now, levels for tomorrow with the NASDAQ, I will be watching. We're holding right here about the 25% harmonic retracement. But if we keep breaking down tomorrow, my minor's about 14,700. And then major, if we get some major selling, is about 14,500 with the 50% of this up move. So really pay attention to that. The upside takes care of itself. If we have a strong rally, I'm watching for the final target on the double. S&P, again, no close above the rotation zone yet. Same difference here. I'm watching for about, oh, sorry, that's not the S&P. Here's the S&P. I got to update that. First target on the S&P, since it is stronger, I am now watching for, if we have some decent selling tomorrow, about 4,500 is key support. And if we have a rip your face off day, I'd be at 4,450 on that. If the S&P does hold up, though, the one that's getting hammered is the NASDAQ. If the S&P holds up, we've hit essentially the first and second target on the double. Above this 45.90 area, I'm focusing on 46.29 still. Dow, if we get a pullback on there, I'm watching about 35.250. But remember, we're into this clear path, and the Dow can keep marching higher even if the NASDAQ pulls back as a flight to safety in the Dow, and the next major target is 35.950 up there. But pullbacks, I'll be watching the 12.5% harmonic at 35.270 area, and then on a bigger pullback, I'd watch for, we have the hooking up 8, and I'd watch for about 34,950. So that is where we sit. I am also inclined to see a big sell again coming soon. By the way, some other channel news. I'm going to probably start doing that open uh, stuff around the open. I might do a test run of it this Friday for non-farm payrolls, but that would be 8 Central, 9 Eastern. And that will be, as I roll it out, as we get the bugs worked out, that would probably be it will be a paid service because it's taking me away from pre-market stuff. But I think it will be helpful to people. I'm going to also start including for people who want to go into more of a paid membership into some special webinars as also stuff for that. So it's not just the open stuff, and longer term, you saw other stuff I had on this chart. I'm going to also start putting up more for the people who want more advanced stuff, like other things I look like DeMark stuff and Elliott Wave. So that is going to be coming up to complement some other bigger picture tools for people. So if you're at all interested, just let me know. I will. I'm still developing it. Again, all this time takes stuff. All this stuff takes time, and it's me. I mean, Bob jumps on here, but a lot of this is me to keep all this going. So, we have a developer that helps with stuff. We have some marketing stuff, but we don't. I mean, a lot of this stuff comes down to me. People. Well, again, I'll probably. And I'm going to subdivide the course. Also, there'll be like a big intro, which I think everybody should still do because you'll get a lot of information you wouldn't get anywhere else. But then if you go through the intro course, then there'll be more advanced courses on top of it. But then if you get the intro, you'll get grandfathered in with discounts on everything else I offer. I also am going to start doing some individualized coaching if people are interested in that. But that will be at a higher price point. So just stuff to think about as we continue to grow the channel. Again, there'll be this kind of stuff. So if you just want free stuff, there'll always be free stuff, and it will be very valuable content. That is not going away. I want people to learn first and foremost. I'm just going to do some paid stuff for people who want to either learn more, learn faster, or even get more in depth. So that's where we sit. Okay? So give me some feedback, especially on Discord. And with that, I will talk to everyone later. Got to get to the company that shall not be named. So bye for now.